Got that mic set up. Let's start the recording here to the cloud. And all right, we're going to get going. So first of all, thanks y'all for spending your Saturday morning with me. Just type a Y in if you can hear me and see the slide. Hey, Scott. All right, perfect. All right, let's go. I got a lot I want to cover today. Those who've come to these Saturday morning events know what to expect, but there's some names here I don't recognize, which is always really good. I'm happy that new people are good. So I'm going to do an introductory PowerPoint. I'm going to look at some things that I thought that I've seen elsewhere or I thought up, some comments about where the market is, the risk that I'm seeing right now. Um, I'm going to then go through my typical market analysis and talk. I'll go through it slower than I do it when I do the recordings and interactive so you can ask me questions. And then what's always seems to be the fan favorite is we're going to work up a stock and I'm going to show you how I trade options. Hi, Neil. Um, I'm going to show you my performance. I really struggled with this one. Last year, I showed it to you on these meetings, and I think it's important for street cred that I actually am a real trader. I trade real money. No, I don't trade all my money because you'll hear why as we go. Um, I learned so much from Ian Woodward, and it's always cool to see that there's still some of us left. Not as many as there used to be. I think I would sit in the room and 20 years ago, and probably the average age had to be 65. Unfortunately, Ian was that old too, so he's no longer with us. But I really owe everything to him because until I met him in the late 90s, I struggled to be consistent. And then when I finally started accepting what he said as being the right things and not ignoring things because I thought I knew better, I started to actually make some money. Um, so I'm going to show you what will look like ridiculous returns, but they're real, and I'll talk about them when I get there. So again, thanks for being here. Use the chat. I think they call it chat on Zoom. What do they call it? Yep. I watch it constantly. I try to answer the questions as we're going. Comments, questions are all fine. There's really nothing that you can't ask me. If I don't like it, I won't answer it, or I'll say, email me, and we're going to go from there. Yes, I will have one slide of an offer for the product. Um, I haven't been selling it hardly at all right now, and there's a reason for that. And when I get to that slide, I'll tell you what that reason is. It's nothing nefarious or bad. Just it's taken longer to happen than I expected it would. So if there anybody that doesn't have it, um, there'll be sort of a loyalty special today. Well, today in the next 12 days. All right, so let's get going. Again, thank you for being here and especially the newbies. So this is for educational purposes only. If I talk about a stock, market thoughts, anything, it's education and not investment advice. Um, the intent of the video is to demonstrate my tools, really a top-down analysis, how I apply them. But I didn't invent top-down analysis, and you can do it inside other tools. Some of the indicators I use, yeah, they're probably unique or different. And how I approach the market may be unique. How I trade options, I'm pretty certain it's unique. Um, and that's why I like talking about it. And you're going to see results today. I guess I'm a scalper. I never realized it, but um, yeah, I've been like, I've been like growing a field of wheat, just take a little bit every day off, and you end up with a lot of wheat. Trading involves risk. You are solely responsible for any investment decisions you make. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. I will talk about how I trade options. I've been doing this options for 30 years. Um, from the early 90s. So I don't even think about what delta and gamma and vega and theta. I don't, I just, my mind just goes right to the trade I want to take. I don't even, I'll show you tools today of how I think about it, but I don't even look at those tools. It's all in my head because I've been doing it forever. But to tell you it's in my head isn't going to help you. So I'll show you how I got there. And as we all know, everybody likes to talk about trading options is risky and put a gigantic asterisk there. And you need to know how to, no matter what you want to do. And if you think you'll never trade an option, don't be silly. Go and learn how to trade options. Even if you never trade an option, there are so many things that options can do, whether it's protecting your portfolio, um, giving you a high income producing portfolio when you're retired, um, growth. I mean, there's so many different strategies, and people confuse you with the options. To me, it's so simple, and I'll try and make it simple for you as well. For those who are new, everybody has to know who I am because you didn't find this because I have a mailing list and I don't buy mailing lists. Every night I'm going to put something out on YouTube. If you're part of the Top Down Trader group, which is free, I'll send an email out at night with the link in it. Sometimes I won't post it on YouTube. I didn't post this proliferate, whatever the word, so often. I wasn't such a prolific poster until I had something to sell. And I typically would post a Sunday video. And then if I was going to do a live session or we were having a live meeting, I'd not hype up, I'd amp up the number of videos that I did around it just to get people to show up. And since this is my hobby, I haven't committed the time frame to build a mailing list and all those things. But this is a place to learn what I do. My Google group is called Top Down Trader without the hyphen in it. You're probably all members, but you should join for a simple reason. Because if you're here and you like this and you want to know when I do this again, the best way to find out. I will share my PowerPoint. I won't post my PowerPoint, especially since it has performance in it on YouTube, but I will put it in the Top Down Trader group. And from time to time, I'll give a discount on the stuff I sell for those that are in the group. All right. My background, again, most of you know me, but there are a few names here I don't recognize. I do have another life besides trading. I'm a medical oncologist, which you would think of as a cancer doc, the kind that gives chemotherapy, not a surgeon. I'm board certified in internal medicine and oncology. Those are the only licenses I have besides a driver's license. I don't have a Series 7 or any of the things that would give me the right privilege to give you investment advice. I've been in the market since the early 90s. I quit practicing in 2001. I grew up with a mother that was really set on the fact that she had one son and he was going to be a doctor. So I went to med school, kept my mom happy. And then in 98, when I was still in practice, I started my first business. And in 2001, I realized that I could do just as well in the business world. And I quit practicing. And I've been very fortunate. Hey, Bazi, I've sold a number of companies into to public companies. And we'll talk about what I do right now in a few minutes. So because of my day job and running businesses, I've had to figure out how to trade without sitting at my screen all day. And I had to figure out a style that would allow me to um, condense the time so that I still have time with my wife and my grandkids. And I've been trying to teach that style for a long time, whether it's via YouTube, things like today, live seminars, and I have done mentoring, but typically the mentoring are local. And I'll tell you, here's how I weed out mentoring students. All these people come to me from work or customers, people I meet, and it's like, sure, I'll help you, but first you got to go read a book. and it's the simplest book, How to Make Money in Stocks. And 90% of the people don't want to take the time to read. And I'm not going to take the time to help somebody, frankly, on a one-on-one, even if they were to pay me, unless they're going to put in the effort. So I mentioned Ian. What a giant. Ian, lovely man, um, strong British accent, and I remember him standing in the front of the room saying that, I'm not even going to try to interpret his accent, but basically saying that he's not a guru, and his goal was to teach us to become our own gurus. You know what? I like that, and that's what I want to do too. I've worked with multiple educators. I own every software program you could think of. A lot of them remain unopened after I buy them. Um, I've read a lot. I've attended seminars. For example, I'm going to go to the Matt Caruso seminar down here in October. I'm going to go to it's a great meeting. It's not the Caruso meeting when I say this. A great cheap meeting is in the first weekend in October in San Francisco, and it used to be the IBD meetup groups in the San Francisco area would come together. But Mike Webster is one of the speakers. I think I love Mike Webster, listening to him. So I fly out to that. So I still like to learn. I mean, medicine, we got to take these things called continuing education credits to prove that we're still keeping up and learning. So no different here. I haven't changed how I traded ever since I met Ian. And I met Ian the first time was, I think, circa 93, 94. He was speaking for a company called TeleScan, which is not TC2000. It's a company that's gone. And then I remember closer to 95, he came to Atlanta. I may be off a few years on behalf of TeleScan. Maybe he was there in 93 and it was 91. I heard him at TeleScan. And he did a presentation in Atlanta, and I was hooked. And everything that I did from that on was to learn his stuff. And what a brilliant man. And so the things that I use are really designed to help me take the learnings from him and a few others to make it quick, and to help me. I want to look at the market, industry group or sector, and then the stocks. And I learned that from Ian. And Ian up there in heaven, this is how I remember him, and this is how I pay homage to what he did for me and so many more. And here he is. I mean, what a giant. He partnered with one of the folks that was in the audience, a super guy, Ron Brown. And it's interesting, Ron and I were both students at Ian, but we have totally different ways of trading. He's a volume spread analysis, and the legacy program of HTSI, which I still use, www.highgrowthstock.com, was so adaptable that they turned it into a VSA program and didn't charge any money, unlike the companies that will send you videos and offers all the time that want 3 or 4,000 for a VSA product. Ron is still around, and he has on the highgrowthstock.com, he sells a monthly service on the VSA. Ian learned from O'Neill, and Ian would talk about how he retired from Xerox. His entire life savings was in Xerox stock, and that Ian, somebody told Ian he was basically a fool not to diversify. And so Ian decided to learn. And Ian found this guy named William O'Neill that had a radio show on in California, and he learned CanSlim. And then, I hate to admit it when I'm in front of CanSlim zombies, because there are some people that put binders on and all they think is CanSlim. But I think Ian improved it. And so that's what I do. Miniverni is probably CanSlim improved and on steroids. Read his books, are great books. Gil Morales and Chris Catcher actually have broke bread with them several times. Super guys, worked for O'Neill, very smart money managers. Bible gap ups, pocket pivots came from them. John Person, I bought my first Person indicators in 2000, 2010, 2011. Um, you probably, if you have Thinkorswim, Schwab's platform, you've got some of his indicators built in, so you might be using them already. And we'll talk about him more later. But I've become very close friends with him. Our wives are friends. Um, we play cards all the time. We hang out, and he's a educator, mentor, author. Owned a futures brokerage. Great guy. And then you're going to now see a theme of dead people. I hate to say that, besides Ian. Van Tharp, the king of money management. His books are giant, and there's a lot of the psychology of trading in it, but a lot about money management and stops, the chandelier stops. Highly recommended. He passed away a couple years ago. Mark Douglas, sort of the guru of psychology and trading, passed away several years ago. David Elliott, in many ways, I've tried to style myself after something that he did, in that he did all these webinars. Now, he did them live every night. I can't do that because my calendar's too far out of control. But he would do a live webinar most nights and not even sell anything. Of course, he had indicators and some seminars you could buy. But I learned so much from him about how to trade. Steve Bigelow, the candlestick guy, also did an amazing frequency of free webinars and live webinars during the week, almost every night. And then George Lee, who I partnered with from the podium many times, a great trader. And then, thank God, not in the category that passed away, but Sagar, Superior Profit, the Q guy, and good friend, and he's got some great tools that I use as well. So these are the ones who I really took from to do what I do today. So I'm a top-down trader. I swing to position trade. I use daily. What does that mean? It means I enter things expecting to be in them from days to a couple of weeks. Sometimes I'll call it a campaign. And even though it's an option, and it's still relatively short-term options, if I keep in that same underlying, I just roll the options up and out, up and out, up and out. It's almost like I'm a position trader, but never get the benefit of long-term taxes. And I call that a campaign. I love option campaigns. I look at pretty much only daily and weekly charts unless I'm testing out a question. Indicators and scans are great, but they're to help me find setups. I still have to look at the chart. And everything's about price and volume. And everybody's got indicators. What components are in an indicator? Time, price movement, volume, and derivatives of that. We all work with the same thing. Some people will say, but Jeff, there's a lot of correlation with what you do and John Carter's went to buy something, and when I'm looking at another system and John Person, of course there's a correlation. We all use the same ingredients. We just make different looking cakes. My favorite, so I'm going to use equities and equity options. Alexander Elder, I should put his picture up there among the living as well. A couple times I was fortunate to go to his live meetings, and he would force the attendees to come up and talk about their quote A trade. And an A trade was the trade that they want to take over and over and over again. Mine's simple. I want a long-term uptrend, pull back to support, and I want breakout off of that support. I use rules-based position sizing and stop management, and seasonality is great if it's good. But if you look at Netflix, seasonality was okay and the stock tanked. Technicals trump seasonality. And I'll go to the downside. I'm not as big of a fan, and the yellow would be the retracements in a downtrend with a breakdown. If I think the market's rolling over, you're going to see me raise cash, raise cash, raise cash. And I'm not afraid to short, but I might buy a contra ETF, or if I really want to feel the need for speed, I'll buy options, which think of 10 to 1 leverage on a 3 to 1 leverage short ETF. So you get like 30 to 1 leverage, and I will play it that way. and I design those trades just like I design my long trades. So you might see me do a chicken shit short position where, and if you don't know what the hell I'm talking about, you will if you stick to the end, where I'll go super long, um, a TNA if I, excuse me, TZA if I think small caps are going to roll over. I'll use the same option trades. I've got my videos this week down to like 26 to 30 minutes. If I didn't talk, I could be done in 15 or 20. And I haven't changed this in a long time. I've got new tools. I'll use my app a lot today. I love the tools in Metastock. Um, TradeStation, I just don't like TradeStation. To me, it's a, even though it's been around forever, it's still buggy. It's not stable, and I get it. I mean, I'll be running scans, and I have to restart my computer to finish my scans every day. So I still have it. I use it, but I don't love it. So I don't always talk about how I do. I only started doing that last year because I thought, well, one, there's a lot of people that weren't at Ian's meetings that don't know me or how well I do. So I needed to do that. And I thought maybe I could generate some interest in what I build and sell and teach by showing that I actually make money doing this. Um, so I showed it last year. I showed brokerage statements. Bill made a couple. I've dropped some hints that it's been a good year for me, and Bill made a few comments. So I'm going to show you my stuff today. I'm going to show you the next few slides, and when I show you my performance since the bottom I called last year on April 7th, there's a 5 in front of the performance. It's a year and a week, and it's not 2 digits. And you'll see that in a couple of minutes. And these are not make believe, and I'll talk about more about that when I get there. Um, I talk about what I think the market's going to do every day on my videos. So there's another way of back testing me. Just go play some videos. Um, no one's perfect, and neither am I. And don't now when anybody tells you about their performance, take it with a grain of salt. You should assume that I'm not telling you the truth. You should assume that I have 9 accounts and I'm only showing you the account that wins. So look at what I did, say, wow, but you know, because you don't really know if I'm an honest broker or not. I am honest. And the truth is, I have a company that is worth probably several $billions when we take it, either take it public in the next 18 months or sell it. And I have a percentage of the company, not shares. And therefore, I have no investment that is worth more than my day job. Therefore, when I get close to exit, I just put the pedal to the metal and only worry about that. So I took most of my money last year and gave it to professional money managers because I didn't have time to worry about it. I also am a man of age. I hope to live 20 more years plus, but those of you who are in their 60s or 70s, you know, as a cancer doc, I saw people that were healthy and a year later they were on their deathbed. So um, part of why I wanted to move my money to professional managers was because who's going to take care of my wife and kids who are used to handouts? Well, my wife, she gives me an allowance. She doesn't get handouts, but who's going to write them a check every month when I'm gone? And so I did that. Now, if you're less than 40, less than 50 on this call, and you're a mother or a father, I sure hope you got life insurance, just like those stupid Ethos or whatever that company's called. They're not kidding. And that's a big part of what happens to my kids when I die, my wife and I die. But because of where I'm at with my company, I give my money to professionals and I kept a small account. And then it's not just being good at picking stocks in the direction the market is in. You got to have a trading plan. How big of a position, your stop losses, how many positions are you going to hold? What is your setup? What is your trigger? You got And when I started, I didn't have one. Then after Ian, I built one. And then for years, I would do a snapshot of every stock that I bought, and I'd fill in why I was buying it. And then I'd show where I sold it. And then I could study those. Now, I've been doing this for so long, I don't do that anymore. Maybe I should. Um, but it takes time to get there. And I'm going to talk about how I train. I'm going to show you my performance. I'm going to show you one of my tools, maybe two of my tools. There's no guarantee or warranty that any of this will work for you. Again, I say all that because I have to. April 7th, 2025. This will be my favorite video of all time. I said a bottom is in. Nobody else was saying a bottom was in. This was temper tariff. Everybody was temper. This was tariff, temper tantrum time. Everybody was thinking that the world is over. Trump's a buffoon. God bless America. We can say that, even though I voted for him. You can say that, and sometimes I think this. I think that, but I put out a video that night. A bottom is in. All right. Well, I'm going to show you what happens after bottoms. I live for bottoms. I live for bottoms. My best years of 2009, 2020, and 25. Why? Because we had major market turns. And hopefully you can use tools that I have or similar to mine to find those bottoms. 2025, I already talked about how I moved my money into professional management. I'm 68, and until I was 66, I never was sick a day in my life besides a cold. I had a big health issue in 24. That's another reason why I moved a big portion of my money to money managers. I got a granddaughter that's 4 that lives 5 minutes from me. I'd rather be spending time with her. I got a grandson in New York, but he's too far away to see every day. Heck, I get to pick my granddaughter up at school sometimes and bring her home or take her to Walmart and let her buy whatever she wants. I never got to do that with my kids. I want to do that. So I simplified my life. And that account, I basically started January 1st of 25. I had 150,000 or just a few pennies short of that in that account. I basically walled off that account. I did not trade any other account except to close positions. I had 3 or 4 positions between Tasty Trade and TradeStation that I closed during the year. I didn't enter any positions. And I tracked it and I reported it out. What I never told you is I lost about 40% of that account when the market pulled back on that temper tantrum and the taper. But it's what happened after that. And that's one of the, I have, my issue is I stay in love with some of my positions too long, and I will take drawdowns. But to me, it's what do I have left at the end of the year? That was too much of a drawdown. So what happened last year? For those who've never seen me before, this is a Schwab tool. In fact, I did it this morning, so yeah, I'm not going to go log in then. But basically, with the Schwab tool, you can go to a portfolio performance. And the best part about that is they look at daily time weighted return to find your rate of return, calculates the daily value changes, adjusts for the timing and size of any contributions and withdrawals. So it sort of is, what's the word? It doesn't care if I put money or put out or take it out. So from the beginning of the year, here's my $150,000. You can see I drew down. I had a beautiful January and February of 25, and then I pulled back with the market. I peaked in October, and then I went sideways most of the rest of the year. So I ended up with a return last year of 180%. And I was pissed because it should have been a lot higher. Starting with that 150, and then sort of my trading plan for 25 was that if I double that 150 and got to 300, which was right about where my arrowhead is here around July 1st, I'd take 500 away from the money managers and put 600, and put 500 more into my account. So I ended the year at 1170, 743, of which half of it was new contributions. The reason why it was at 3,000, I had a margin call in the beginning of the year, and the rest was the gain on on my portfolio. I was pretty happy with that. But and then I said, well, what was the performance from the day I said the market bottomed for the next 6 months? And so here you could see April 8th, 25 to October 8th, 25. And you could see my investment change was $798,000 and a return of 465%. This is while the markets were on fire, by the way, but I was still 10 times or more the return. Now, I then pulled back, someone went sideways, and it's funny, Webster was talking last night, and he said, yeah, sometime around October 10th was when the market just became very difficult and choppy. So here's where we at in 26. So I said, well, what if and I didn't take the money out. I asked the question about, well, most recently, we had a garden variety correction. Now, we didn't know that this wasn't going to be a big bear. We dropped 10, 11%. I didn't expect to see my constellation of bottoming signals. I saw some. On April 6th, my daily model said go long, so I used that as the start date. March 31st, my other signals, breadth signals, said we were bottoming, and then the follow-through date came in days later. But on that March 31st, I'm going to show you the signals that gave me the bottom. It said it was time to add or go long. And because we're in a news-driven market, I knew it was a little risky. Between April 6th and April 17th, in that same portfolio, I was up 43% in 2 weeks. I'm not doing this to show off. I am doing this to make a point. And the point is, this type of trading works. Buying, knowing when to go in and when to get out from a macro perspective is what's fueling this. Not that I'm a great stock picker. It's know when to hold them and know when to fold them. And Ian would get up and sing. I'm not going to sing. Now I said, well, all right, well, what if we look at from the April 7th, 2025 low? Look at the performance in April. This is not normal. That's worries the daylights out of me. I've been up since the bottom of the market on April 8th, which is for April 7th, is when I put out my video. Until today, I'm up 577% and over $1,075 return. I'll take it. All right. And if you look at since the beginning of January, where I had that big drawdown, I'm still, the beginning of January this year, I didn't have a big drawdown here. You can't see it because this is in the way. This is the drawdown. The market pulled back right at March 30th when it was the bottom. But from the beginning of the year until now, I'm still up 42%. So I'm pretty happy with my performance. How do I get there? I use options. Options are leverage. Leverage, leverage, leverage. But guess what? That comment I made earlier about options being risky, it's a lie. All right? Lots of asterisks on that comment. Options can be very risky if you're stupid. I don't get naked, at least not with my options trades. And at 68, I don't get naked anywhere except in my bedroom. But I don't sell naked options. The way you get killed with options is if you are naked or you do too big of a position size. If you learn how to trade options, options can be low cost and low risk, defined risk ways of trading. I'm not using a lot of margin right now. I think I saw my statement. I had $13 of margin fees since the beginning of the year, and right now I've got a ton of cash. I avoid big losses. How I design my spreads. I don't chase shiny objects. I scale up and down my cash reserve based upon the market conditions using the timing model, and I talk about that on every video. I follow my trading plan. I use the A scan as pullbacks and uptrends. The A plus scan are the two momentum dots. Those are my two go-to trades. Weekly HCDs is a John Person setup, and I look at them on the weekend and I find a lot of trades there as well. Position size and stop management. Options are different, but I try and buy the same size that I would with stocks, and I try and be smart with my stop positions. A lot of times the entire investment in that option for me is less than where I would have put my stop. So the most I can lose with total destruction and a gap against me is what I was willing to risk on my stop. No revenge trading. I'm really bad at getting back into positions that beat me up. And that's a mistake I have. I have a problem with thinking I know too much, and I will ignore signals because I don't like the name. I wish I could trade. I wish Praveen, I don't think he's up yet because he was up at 6:30 texting me. I was waking up to prepare and he was finishing the trend lines update for the Market MRI Pro. And I wish he could turn off the symbol name and just scramble it, because I'd be a much better trader, because sometimes I let my intelligence outweigh my my gut, or my gut outweigh my intelligence. I roll my winners up and out, and I'll show you an example of that in a second. No FOMO buys during work time. I will not buy a stock during work time because I see something. I have my stock orders in before I go to work. I will, however, pull out my phone and adjust a position during the day. And I do a lot of adjustments on my options. And it's not a small account anymore, which is good. But when I started with the 150 account, which with all due respect, I know that for not everybody that's a small account. That was a small account for me. It was great. I slept better. I didn't worry about the futures. I didn't have anxiety at earnings season. I've been burned enough that I actually bought a put on Netflix, equal number of puts to how many calls I had, because I had a lot of profits in Netflix, and now I have less profits, but I'm still profitable. And I want more time for what matters, which is family. I'll give you a little bit more color. And let's see if I can make this bigger without having to restart the program. And I am very at work, my customers would say I'm a very honest person, and I am. There is no reason, in my opinion, to lie or make things up, because if I was to lie, I have to remember the lie. And if you keep on lying and saying things over, you're ultimately going to forget what you told somebody, and then your lies become compounded. I just don't do that. So I am wide open here, except you don't get to know my password. You'll see this 4803, all right? And that is the account that I've been showing you. So in case, all right? And just to be fair, I have this account. It has nothing in it. I'm not trading it. This is an old account. It has nothing in it. I have an IRA, which I'm ignoring, which is stupid. I should be trading in that one, but I don't trade it because I'm concentrating on this account here. Right now, I've got cash because my buying power is 1.4 million, but I've got cash of $746,000. I'm a little worried right now. I am worried for the next few days or week. I took, well, it was options expiration, and I let a lot of things, um, I cashed out a lot yesterday. I still have a lot of positions. I don't buy the 7 position rule. I think with modern technology and using stops, I can manage a lot more than 7 positions. Um, the reason why I have a minus $5,000 today is that on AMD, if you think about a broken wing butterfly, which is my favorite trade, I buy one close to the money, maybe 1 strike in the money. I sell 2, maybe 2, 3, 4 strikes away. And then I buy 1 strike further than that. So I have a long call spread from at the money to say $20 favorable. And then I have a short call spread that's $5 negative. And I closed out the long spread because it had maxed out, and I just let the short spread expire, and it was -5. And I'll show you that in more detail. If you look at my account, what do I want you to see? It's not about how much money I made. And yes, you could see that same P&L this year to date, $520,000. That's since the beginning of the year. I don't have big losses. Okay, I do get them sometimes, and typically it's because things gap against me. My Netflix trade, I had 90 calls, the stock was $108, and I said, you know what? I'm going to buy 108 puts. And I bought these puts, you see, I bought them on April 16th, 108 puts. And that was, I think, the day before, the day of earnings, maybe. And I had bought the position on May 15th. Actually, I bought it on April 6th to expire May 15th. And so I was a little bit in the positive. I didn't want to get killed. And I got killed on Microsoft this past earnings run. So I wanted to protect myself. All right, who's drawing on my screen? Don't draw. I don't think that was me. So I know there's a way within, let me see if I can get rid of them. There's a way within Zoom to draw, and you can draw on the speakers. It's just not a good thing to do. So let's see if I can get rid of those. Nope. Well, whoever did it, see if you can erase them, because it's going to be very annoying for the rest of us. There's got to be a way to get rid of them. Oh, let me try that again. Let me just see if there's a way, because it's going to annoy the hell out of me too. Here we go. So please don't draw on the screen. If you have a question or comment, I'll answer it. Just put it in the chat. What else do I want to show you? I want to show you here. Let's just look at AMD. And I'm going to walk you through my mindset of how I managed AMD in this trade. Okay. I opened AMD with a broken wing butterfly on March 4th. So let us, so let's go in here. So March 4th, right here. And I think we talked about it on the program. I just thought that the market was starting. I thought the market maybe had bottomed here. I love the tall white candle after an indecision doji. And I bought it, and I would have put my initial stop right here below the 200-day moving average. All right, so I entered here and I never hit my stop. Yeah, this would have been a better time to buy it. I was already in it, no problem. So let me go back into my Schwab account. On March 25th, I wanted to buy back the short put. So I bought the 230 call that was short, half of them, and I sold the 240s that were long. The net result of that is I have a 190, 230 bullish spread. At maximum value, it's worth 40 bucks. And I paid for that spread $14, $2 because the covering, so that's $17, $18.50. On April 8th, I decided to take another trade. And what I did is I bought 5 230s for April, sold some 250s, and bought back a 255 just to give me a bigger position size for 596. The same day I closed, let me try to remember this one. I bought, this is just more. This is the same thing. I bought bigger size. They break up the trades. I have to remember that. On the 10th, I sold the short call spread, the 250, 255. So now I'm left with a bigger position of 230 to 250. By the way, I started at 190, but now I sold I rolled out of the 190, so I have to go look. No, I still had the 190. So I got 190s longs. I've got 230s longs because of these trades here. I'm short at 250 after this move here. Same trade, getting rid of them. They're all different pieces. And then that's all right. All of these here are the same trade. They just broke it up into 5 pieces. And then on April 17th, on options expiration, I had a 190, 250 spread, 15. So that's controlling 1,500 shares times 60. I got $60 basically, so $90,000 credit, and I paid all these numbers. And then I sold the 230, 250s, and I got 20 bucks. So if I look at my AMD performance, I made between March 4th and April 17th, my initial purchase was $17.50 times 15. And I ended up returning on that trade a profit of $54,915. The concept here, and I know I'm babbling a lot and I haven't gone into the program, but I never talk about what I do once I get to trade, and I thought that was important. The concept here was I entered a position with 1 long, 2 shorts, 1 long. I very quickly decided that we were going to blow through my top number. So if I could close a 10 wide for less than 3 bucks, I'm going to close it. And that's what this was about, closing the short call spread part of the butterfly, closed $10 worth for 285. Okay. And then I bought more to have more long calls at the 230s. I had the 190 long calls. And then I got rid of again the short. Here was only 5-point difference between 250 and 255, but I got rid of it for $1.90, and I ended up would have cost me $5. So I managed this trade the entire way, and then I closed it all on Friday because I wanted to take profits. And that was a 5.5 week, 6-week trade for $54,000. You go figure out the ROI on an annualized basis. Every one of my trades goes the same way. I enter, I dump the short when the stock starts to move. If I can get in for 2 versus 5, 3 or 4 versus 10, and then I try and hold on with the long calls, and that's what I did. If you look at my settled trades, I do lose money, guys. I will never say I never lose money, and I got some bad trades here. Oh, that's selected. Okay, we don't want to select anything. Hold on a second. All right. I couldn't figure out what the minus. All right, so ignore this bottom line because whatever one I highlight. So if I was to highlight all of them, I don't know what it would do. There's the same amount of money as I'm profitable to date. So ignore that line. I've had some losers. I had some big losers. And, shit happens. I still lose money sometimes. First Solar had an earnings gap against me. Oklo, I overstayed my welcome. CRM, um, well, it was a software stock and it blew up. I mean, these were my big losers. And it does happen. But as long as I got big winners, AXTI, Amazon, GE Vernova, Google, I absorb my losses. So no one's perfect. Is my win rate over 50%? I have no idea. It probably is not because I'm losing on every one of those trades that I'm closing early. And by design, a broken wing butterfly has two longs and one short. I'm going to lose on a third of those positions every time. It's just the way typically it works. So I bet I lose more than 50% of the time. But the ones that I make money on, I make a lot more money than I lose. So, any questions about what I just went through? Um, Thoughts, concerns? Yeah, yeah. I don't worry about the losses. Heck, I want to worry about my equity curve, and I want to make sure that I don't. I don't want that drawdown that I had at the beginning of last year. That tariff thing clobbered me. Probably wasn't the only person that got clobbered. Now, some of you on this call are money managers because I know you personally. You can't do this. You can't be. Um, do I use a tool to monitor the option trades? No. It's all in my head, which sounds horrible. But the mobile app for Thinkorswim is outstanding. And when I go to the bathroom at work, this is disgusting. I apologize. Here's how I do trading at work where I don't worry about my employees seeing me. I've got a lot of employees. And if they see the boss with 7 monitors with charts on it during the day trading, how productive are they going to be? So I go to the bathroom, I lock the door in the commode, I pull out my phone, I go to my Thinkorswim and I do adjustments if I need to. That's how I manage it. But the rest of it, no, I just look at my phone. I just love that phone app. All right, that's it on my bragging. Back to the scheduled show. All right, I have lots of platforms I use. HGSI, I still use it. It is not my platform. I hope it's around for a long time. I haven't talked to George, but he went to a month to month. And Ron Brown also went to month. And in Ron's case, he was pretty open about it. He's getting up there in years. As we get older, we get health issues. And, he didn't want to commit to long term because he didn't know how long he wanted to keep doing it. And so I got a feeling it's the same thing about HGSI. End of day program, you can get updates from Thinkorswim or other sources during the day. Everything, no, 90% of what I do can be done in HGSI. Just has a high learning curve. TradeStation, I have my app. So Bazi, Greeks. I know the Greeks. I know how to use the Greeks. But guess what happens when I do an option spread? If I'm buying one and selling two, or if I'm doing a synthetic where I'm buying and selling a call at the same strike price, um, I just eliminated delta, theta, vega. I mean, and so most of my option spreads, the Greeks get neutralized. I had a good question come in. I'm going to answer it in a second. Let me just go through the platforms. TradeStation, I have a great app for TradeStation. TradeStation, I think sucks. It's 32-bit, it's unstable, and they just released their new version. And right now, I don't see how you can put indicators or systems in it. Um, it was bought by the Japanese. I've got no issue with Japanese, but I think they bought it to be a crypto platform and lost interest. Um, there's a lot of legacy educators that use TradeStation for their training and their education and their indicators, and it will be around for that, including my stuff. TradingView, great platform, affordable. In fact, when they had their Easter sale, I put out something in the top-down trader reminding people if they bought my app and the freestanding app, they get TradingView indicators as well. And they had some great prices. Metastock, the latest one I went into has great advantages um, because of some of the scanning, the international, the intraday, the real-time streaming. Um, I call it the granddaddy of platforms. It's stable. The problem with Metastock, well, the problem is a big word. It's expensive. I mean, you're paying $1,700 a year for data if you're real time, and it's a lot of money. And not every, and I pay for it. In fact, I hate to tell you how many real time feeds I have in Metastock because I like Sagar stuff a lot, and I like it in Metastock more than TradeStation. And then I've got my platform, VectorVest. Let me just bring this up, VectorVest up, because again, this isn't Ask Me Anything. And if I'm going to tell you to ask me anything, I'll answer your questions unless they're something really bad about the question. See if I can break the computer today. VectorVest, um, I met and spent some time with the proprietor. His name was Bart Delidio. And I believe Bart passed away a few years ago. I believe he passed away. I know he stepped down. He was like Ian, um, kind of a short, um, not lightweight size guy, brilliant speaker. And he was an engineer and he developed VectorVest back in the early DOS days. And VectorVest was an advisory platform. And then it became a software product under DOS. And now it's a Windows product. They probably have the biggest user base out there. The benefits of VectorVest is they've got their timing model, which is really good. And if you spend your time with VectorVest, in fact, they have a whole series of different timing models you can use. They're excellent, their timing models. They really are. They have every night they do a short educational thing, which I find to be extremely useful. Daily update, the last one they did was Thursday, geopolitical worries eased. And these are really worth reading. And they'll go through where they are with their timing model, what's leading, what's working, where they're the most useful are when the market's changing. And Bart was really amazing at that. And it's a good top-down program because it allows you to look at industries or sectors, stocks, and it's another one of these programs like HTSI, like anything else where you have spreadsheets, where you have different things here, stocks down, and you could scan based upon whatever you want to look at, sectors, you want to break down into a sector and see what's inside. There's a way to do that. So there's a lot to like about this program. Here is the negatives, Tom. And obviously I have it, and I'm in the URS trading retirement thing, which I go to every once in a while. That's another good thing, is they do a lot of great trading. It's a closed program. I can't put my indicators or scans here. So when I get to that last, the last 100 yards between my house and the cable out on the street, it doesn't do it for me. So I like it from a top-down perspective, but when it comes to finding stocks and looking at charts, it doesn't have all my things in it. I'm going to put this PowerPoint into the top-down trader group, and you can see Sagar's tool set, which I'll mention as we go on, superiorprofit.co, and John Persons at personsplanet.net. The Market MRI app is out, and there's a lot of power with that. And again, Metastock is a unique program. And the part, of course, I got all these things open, and I knew it was going to be slow as molasses. Yet, one of the things I really like about what they've been able to do is I am able to scan for trendline bounces and breaks. And if I'm looking, for example, at a long-term uptrend and I'm bullish, I want to find bounces. And so, I mean, I'm just pulling one out of here that I have not pre-screened this. And so it allows me to, let's take a little long. Let's make sure it's still real time set up. Go back online. All right, go online. And so here's your long-term trend line. And it's looking for bounces off of it. Here's my bounce. It allows me to look for stocks that are pullbacks and uptrends, retracements and downtrends. And as of right now, we don't have, let me say it differently, you don't have auto trend lines in your Market MRI Pro app. You might by the time this coming week is over. Somehow I forgot the G here. So this is the only selling slide you're going to see all day. This was not designed to be a selling thing. So I mentioned that I haven't been out selling anything. The reason is that somebody on my list who I'm good friends with, and I won't name the name, but you better figure that out already, and I are going to launch are in the process of launching a new company together. We are back on Black Friday for that unnamed genius. I created an app that looks just like mine, but of his tool set. And what we've decided to do is sell one product, and that one product is going to be the combination of his tools and my tools. Those of you that bought that Black Friday special and already have my tools will be grandfathered into the new tool. And this one gives you defined stock picks, buy, sell, targets, stops, etc. Those that have my tool will have a discounted update into the combination. And those that don't will be able to buy it at what the combination price will be. It takes forever to get the EIN. That's partly why we haven't launched it yet. I'm hoping my EIN comes in this week so we can start selling from the new company. I decided that I would do this today, and if anybody attended that doesn't have the product, let me tell you the special you're going to get, because I kind of know what the new product is going to cost. It's more, and I know what the upgrade is going to be. So if you wanted to buy it and you got to the end of the month, the price on my tool is $26.95. You get the Trading View package for free. Typically, I offer it at $19.95, and that's the discounted price. So most of you came here from Top Down Trader. Many of you have my tools and other platforms. So I'm just making it very simple. If you've ever bought anything from me, computers, I sell a lot of those things, or you've bought my other tools, you can have it for $15.95. Then when we launch the new product, you will qualify for the same upgrade price as everybody else, and you'll get it. It'll basically come out to what the launch price is of the new product. You'll just pay the difference, type of a thing. So the way that my deal works, Tom, thanks for asking the question. It's a one-time price for the product, and you get all the updates, but I have to pay for data. And so you get to pay for data And so if you have one product, it's $4.95. If you each, and we're having some data cost challenges. My guess is it's going to go to $8.95 a year for data and support because you're getting two educators, you're getting two people updating their product, and we've got to pay for data. Our data is short delayed streaming. We don't really give you a streaming option because my trading style doesn't demand that. John's probably does. Um, we want to make it full real-time streaming, but think about other companies whose products you have are real-time, including your brokers. You're having to go sign a pro versus non-pro. And believe me, if you're pro, you pay a lot more. Plus, you got to pay exchange fees. And I did mention what the Metastock annual data fee is. We're going to build APIs for Metastock, for Schwab, Thinkorswim, and maybe interactive brokers that will allow you to connect for real-time streaming. And we're going to get close as we can to real time without violating the exchange laws because it costs me a lot of money if I got to pay for the exchange fees. So we're working on that, but that's the basic story. Those that have been around since the beginning, we're coming up to that time when there's going to be your time to pay for the upgrade, and since it's still $4.95 until we launch, until you upgrade to the new product, so you'll get that in under the wire. You don't pay the maintenance until year 2. And what else can I say? I was going to say those have been around from day one. I pushed their upgrade out a few months because they helped me by finding bugs. The program is fast. The program keeps getting better, and it will continue to get better, and that's kind of what the update fee is for. If you have any interest, just marketmripro@gmail.com. It will never be cheaper than this again. Typically, I give $200 off for the TradeStation, $200 off for the Metastock, nothing off for the TradingView, and then 100 off for the top down. I just decided just give everybody 400 off. And that's that. And the other thing I want to sell, let me just, again, if you don't know me, you don't know, there's things you don't know. I've got 27 notebooks right now. I'm not kidding. Why? Because I'm addicted to buying new technology. But I buy them, I play with them, and I sell them. And many of you have bought them. And if you actually have bought them and want to say it was a good deal, you could put something in the chat box. But I only buy high-end gaming machines, and so 26 is a bad year for buying computers, and I kid you not. Micron, SanDisk, memory prices and storage are going crazy. And the updates are very incremental. I just bought a new Razer 16 that I may return. And I bought the same one last year. It's got a newer processor, the same video card, but it also has 32 gigabytes less memory and 2 terabytes less storage for the same price. So things are going crazy. I've got 2 of them that I bought last year, and they're both going to be discounted pretty heavy because I don't have the box, but they'll come with the AC adapter and plug and all the accessories, and they're like new condition. The ROG, I can take out the extra 4 terabytes if you don't want to pay for it. They're both high-end machines, and the HP is what I bought last year for California because I took the wrong computer bag, and when I got out off the plane, I realized I didn't bring a computer. And so I had to rebuild one the night before the meeting. They're both great computers. Again, just email me. And let's get back onto the story of why you're here. So we're going to do this probably until 12. We'll take a 15-minute break, and then I'm going to talk about options, unless it goes faster than I thought. If you got to drop early, no worries. It's going to be posted. So top-down investing is what I do. It's about the market, the market, the market. Find the leading industries and find the best stocks. Even better than that, find the wolf pack. And what is a wolf pack? A wolf pack is going to be several stocks in the same industry group that have all of a sudden started moving at the same time. This week, the wolf pack was rockets, probably because of the Artemis 2. Whatever the first name was that went up. The other wolf pack that emerged was the what's it called? The next generation quantum computing. So I go heavy into the wolf packs. And I ride them as long as they ride. The biggest money is holding these positions over a long time. Well, how do I do that with options? I just showed you. I roll, I roll, I roll. I mean, I'll be totally obnoxious. Yes, rockets with Musk's SpaceX IPO. Go and Google or go to and ask Gemini what public companies own a significant percentage of SpaceX IPO. What public companies own a significant percentage of Anthropic? Why? Because if they invested at 10 million, 100 million, it's worth 10 to 100 times more on both of those companies. And that's sitting there not really being calculated as part of their valuation. I bought Google at 290 when I looked how much of either SpaceX or Anthropic or both, how much they own. One of the satellite companies owns a big position in SpaceX. So yeah, those are unusual things because they're so big. I was going to go back, and again, I'm more on the interest of teaching than bragging. And please, that's what that's why I hate doing this. I mean, who ever heard of AXTI? I sure as hell never heard of AXTI. But I've got a six-figure return on this thing this year, and I've never owned a share of the stock. And I'm trying to remember why I bought it. It had to, I think it was down here in this area. And I could go find out the exact date of the first trade. I won't have last year, but let's go and look at, I mean, this is what you want to own, right? It's a little bit loosey here, but let's look at AXTI. Never owned a share. Let's remember how I did this. So I did AXTI. That's not what I want. That's right. I was looking for that. And let's look at trade history. Let's look at AXTI. You're going to see a lot of trades. All right. So this was finishing off an old trade. So can I go back longer than that? I wonder if I can. Well, there's a way to do it, and I can't figure out it. Doesn't really matter. But I want you to how many trades I have in AXTI. And a lot of these are little cheapy trades, closing things or adjusting things. And then you look at the ones that are in red are the closing trades. And they're all little credits. Yet I look at AXTI and get to the right view. And I've made $115,000 on AXTI today. And I should be able to the thing that blew my mind about AXTI, this call, okay. Not a butterfly, that's what threw me. I guess this may be my first trade on AXTI. In this trade, I did a an options trade, which is called, I call it chicken shit synthetic. And what I did is I bought a call at $40. I sold a put at $15. Why did I do that? The stock was probably in the middle. And net, I paid 47 cents to enter a call and sell a put. And then I bought a protective put for $1.28, so I paid $1.75. That means no matter what happens, the most I can lose on this trade is the $1.75 and the 250 between these two strikes. It's a short put spread. Said another way around, I used a short put spread to reduce the price of the call from $3 to $1.75. 13 days later, I sold a 30 call. This must be on an old trade. This is one that's got me killed. I had to be in it from the prior year. Let me see if I can get any kind of, all right. I think I must have bought it at the end of last year. But the point is, I rolled up from starting with the $17 strike price. And notice that the strike prices keep getting bigger. 35s, now 45s and 50s, all the way up to 70, 65s, 80. Rolling up means over these 4 months, I have pushed my costs, my strike, from 15 all the way to $75. Rode it up. And while doing that, I rolled it out because I went from January options and now I am in May options. So up means I keep going up higher strike price. Out, the calendar gets later and I keep putting money whenever you see red into my bank. Yeah, you know, Bazi, I tried that and you're right, it should do that. Oh, you know what? I'll do, those are the built-in. So I went 200. I hit, did that go back? It doesn't seem to go back. So I'm confused on that. Well, I'm not here to teach you think or swim. Stake check. Okay. All right. All right. So let's try that. And I'll tell you the funniest thing. I should just have to hit. Maybe that is the first trade, and I got it. And what fooled me was, oh, this was probably around the. I have to go back and I'll have to go back and look at this. I have a feeling I know what happened here, and in fact, I know exactly what happened. I had a long call and a short put. This thing ran up to $25 right away. At earnings, I sold a 30 call and bought a $25 put. And the reason why I did that was not so I could get 23 cents, because I didn't trust it. At earnings, this thing tanked. Okay. But I was set because I had $7.50 guaranteed because I had a right to sell it for 25 and I bought it for 17.5. Somehow after it tanked after earnings, it started going higher again. And I closed the 15 put and the 12.5 put, and I closed them for 48 cents. I bought them, I was paid $1.19 and I bought it back for 48 cents. So I doubled my money on that. And now I don't have a short put spread anymore. And then I just basically played this game all the way up. And these are the same, not the same, but that's how I entered this. And we're going to talk about that type of an option trade in a few minutes. So if we go back, I want to get to the program before too long. Markets are never wrong. Our opinions are, so be careful with your opinions. Money management, you got to have stops, targets, and know your right size. And it's never different this time. So I have questions this weekend. We've had 7 big bull candles since the follow through day. Is that unusual? The answer is yes. Now we're going to figure out, should we be worried? And what is risk of change in the market character here? Do we have any signals that should concern us, at least short term? Yes, we do. Hence why I took a lot of profits. And now I have a little bit less than 50% in cash in that account. I've got protection on Netflix, protection on my Bank of America, which is a long-term position. And I think I got protections on AT&T. So I've got probably 65 or 70% of my capital is cash equivalents. Here is what we got so far. Here was the follow through day. I think on your chart, you're going to get a green dot. I don't know why mine still says follow through day, which I like better. So here is March 31st when I saw signs of a bottom. We're going to look at that in a few minutes. Here is around April 6th when my models turned to a buy. Here is the Cancelim, William O'Neill, Mike Webster follow through day. We've already moved a lot by the time we got there. That's why I don't rely on it. But look at the move we've had here. Is that unusual? And by the way, this was a negative day, but they're looking at higher highs. And we have higher highs here 7 days starting after the follow through day. So Mike Webster talked about this yesterday. He went back as long as they had data for, which looks to be the early 70s. And what these are all the follow through days and how many days they lasted. These are not all the follow through days. But it tells you you've only had 5 times going back to 1973 when you went up more days in a row. That worries me. So then I had to go back and look at some of these, and some keep going higher, and a lot of them go sideways, and a couple pull back. So we're at a point where we need to be paying attention. That's the purpose of this slide. NASDAQ 100 long wind strings are bullish. So this is a bullish signal. On Thursday, and then Friday would be day 13, was the 13th, as of Thursday, 13 or 12 days in a row it was up. Well, what happens when you're up 12 or more days in a row looking out? At 3 months, in 6 months, you got a couple of really bad ones. But if you want to deal with a drawdown, you could see that at 12 months, they're up all the time. So if you want to just close your eyes, hold your money, and not worry about a pullback here, you're probably okay, because every time we've seen this much strength in the NASDAQ, that's what's happened. But be prepared for some nausea and vomiting. Ryan Dietrich, really smart guy, and he posts these things on X. And I mean, I'm not selling you my thoughts. Why not use his stuff? This was another interesting thing here. This was the first time in history that the S&P 500 was up 3% for 3 consecutive weeks, and each week gained more than the previous week. It's the first time in history. Well, that's kind of interesting. I call that bullish exuberance. So let's ask the question, what happens after strong rallies? These are 10-day rallies, are historically bullish. So as of the 14th, we're up 9.8. We were up every day this week. So we're up well over 10% here. and you look out historically, 100% at 12 months, you had a couple bad years in the dot-com blow up. 84% of the time up, average is 18 to 20%. So more reason to maybe be bullish and ignore short-term signals. A lot of people are equating the AI with the internet and the internet blow up with what people think is going to happen with the AI stocks. I'm not saying I agree with them. I'm just saying what people think. And that was the year we had the biggest pain during the dot-com explosion. Something else bullish. I talk all the time that year 2 of a presidential cycle is the worst time historically. When does the market bottom? In early April. Are we done? Is it free sailing to the end of the year because spend time so that people get reelected? Maybe. That's bullish. And now here's the bearish, and we're going to go into the program. But those that watch my videos know how much I pay attention to something called the 13-week new high, new low indicator. And it basically takes how many new highs over the new highs and the new lows at 13 weeks and plots it. When it's above 0.95, I guarantee you a pullback in the next 48 hours. When it's below 5, I guarantee you a bounce within the next 48 hours. And guarantee is a big word, but I guarantee it. What are we at right now? I got to get the glasses on. Too small for my eyes. We are at 0.98 on the S&P 500. We are at 0.98 on the S&P 1500. We are at 0.92 on the NASDAQ and 0.97 on the Russell 2000. Anybody want to ask me why I took profits on Friday? The last 7 slides told me, and should have told you, that we're probably going to go higher the rest of the year. This slide tells you we got some digestion coming. And then why else might caution be warranted? And this one blew me away. If you look back in all of time, there have only been 3 dates before Friday where the market was at a new high and had a gap up of greater than 0.75% and was up over 5% in the last 10 days. 3 times. What do the next several weeks look like? We're going to get a pullback here. I am convinced we're going to get a modest correction here, and that, not even a correction, and then we'll go higher. Is where I'm putting my money. So I took a little bit off the table, so I got even more to buy when the market starts to turn around. That doesn't have to happen. I mean, Bill sent me a note this morning where the Iranian, one of the leaders, came out and said, well, I didn't really say that, and that the straits are still closed and there's no shipping going through. And he came out Friday after hours, so it didn't hurt the market. Yep. Yep, Bazzi. What do you think the market's going to do on Monday? Now, of course, here's the crazy orange man syndrome. He may come out on Sunday saying the world is great and we just did a deal. And he's turning it into a transaction. The last thing I heard that I thought was brilliant, actually, was rather than sending in special forces to get their enriched uranium, he wants to pay them $20 billion, which will pay for a lot of their reparations that they want. And the best part is he's just giving them their own money back. So he may be crazy and orange, but we'll see what happens. And then lastly, before I go back, and I got a couple more slides, and then I want to go into the program and look at the markets. I put this out. I probably got more feedback from this than anything I put out in a decade. So let's talk about it. How many of us have heard that you got to stay in the market the whole time because if you're not in the market, the 10 best days of the year, you're not going to have as a good a return as buy and hold. Heard that for 30 years. Here is what they're not telling you. The blue line is the fully invested, never come out of the market. You can rotate around. And what I basically did is I went to my AI portal and said, go back to 1990. Look at the S&P 500. Tell me what the return is if, one, I bought the S&P 500 and I didn't change, and that return was 10% annual CAGR. So my 10,000 turned into 250,000, and I had a maximum drawdown of 55%. And then I said, tell me what happens if I bought the S&P 500, but I was out for the 10 best days of the year. What does that do to my return? And yep, they're right. You missed the 10 best days of the year, you're flat. Your 10 may have doubled, and you have the same drawdown as buy and hold. And then I asked Mr. AI, I love AI, I don't know what to do with it, but I love it. What would happen if I go back to 1990, put $10,000 in the S&P 500, using that as the market, and then I was out each year for the 10 worst days? Holy Toledo, my CAGR is now 22%. I've got 4 million in my account, and my maximum drawdown's a lot less. I look at this and there's a message there. Who cares about the 10 best days of the year? I want to be out for the bad days if I can. And I think good tools can get you out. And we were not in a bear market. We were in a correction. We were not in a bear market. We were nowhere close to a bear market. But I put this slide in just to remind us that you get the biggest rallies when you're in a bear market or a bad correction. And we may still go lower, although all those earlier slides said, yeah, that's because Kramer's a lemon. Phoenix meeting. It is happening. We will have the location hopefully this week. First of all, kudos. Alan Wade, who's on this call, is doing all the legwork. It's going to be in Phoenix. It's going to be Friday, Saturday, and Sunday, June 5th through 7th. I will be there. Hopefully Chris White from EdgeRaider will come in via Zoom. I know people want Deb. I'm going to reach out to Deb to see if I can get Deb to come. John Person will Zoom in from Palm Beach. I'm going to work on one more. Last year we had Matt Caruso, and I thought he was great. So I will be finalizing everything. It's going to be $500 and cheap meeting intentionally because I don't do that meeting to make any money. And what I told Alan, because I know what the break even is, we will open it up online and live. It will be $500 either way. Ooh, that's a great idea, Bazzi. Okay. It will be, we'll have drinks and coffee all day in the room like I do in the Florida meeting. And we'll serve you lunch in the room. And I will take you out to dinner on Saturday night. So you get all that for your $500. Obviously, the hotel and airfare are your responsibility. My first responsibility is making sure that Alan gets paid for any expenses he gets. The second responsibility for me is to pay for Praveen airfare and hotel, so he'll come to support people at the meeting and learn from you so you can put more things in the product. The third thing is to pay for the dinner, and then if there's any money left after that, and after that, it will be pay for my airfare and hotel, and at that point, there won't be any money left. unless we get a lot of attendees, and then we'll figure out what to do with the extra. I don't do this to make money. I have too much fun doing them. So I hope to see you. The John Person meeting in November, we may have something to be presenting together then, is going to, yeah, I will bring the correct computer this time. That was not a cheap meeting. That meeting's probably in the $1,500 range. But you know, we have, this is his business. It's my hobby. And so, all right, again, if you have any questions about anything, we're not done. Don't worry, we're not done. Just reach out to me at marketmripro@gmail.com, issues with the product, coding at marketmripro.com. And now let's go into, hold on a second. I want to hit that. All right, that's what I want to do. All right, so now what I want to do is I want to walk you through the program. Oh, please tell me I didn't. I think I just ended the video. All right, that's a, nope, here it is. We're good. Okay. Now what I want to do is walk through the program a little slower than normal and show you how I gain insight from the different windows that I use. You will notice I have a lot of tabs at the top. You don't have any of them probably after market breadth 13 week. Some of these I don't even use anymore. I start a lot of things to test them, and if I like them, they become part of the program. As soon as we get done, I'm going to load the beta up, which will be 27, and the beta will turn back on relative strength rating, similar to what IBD uses. I don't know their formula. They don't know my formula, but they're pretty close, I'm sure, because they're not that different in results. And auto trend lines are done. I just have to review them, and then we'll have to probably modify the sensitivity if there's too many. Once I sign off on auto trend lines, then we'll be able to scan for bounces and breakouts and breakdowns. Very exciting. So first thing I do every day is I go into the daily briefing. There are 4 different modules in daily briefing. There's nothing you can't do in 14 other places here except for over here. Up here, I always will, it doesn't look like this when you start. You've got to, I always rank them by 1-day close, and then I right click here and I hit best fit, and it makes the columns look right. Bitcoin was up 2.83 on Friday. It had a decent week. It was up 5.73. Russell was up 2.15, Diamonds 1.78, Qs 1.3, and Spider 1.2. Super day. If you look at 5-day change, wow. The best performer was the Qs up 6.18. Second was the Russell 5.54, 4.5 for the Spiders, Diamonds 3.13. How many weeks do we see that kind of a return? This is 3 good weeks in a row. There's a reason my return for April looks like it looks. Over here is important as well because it gives me a sense of where things fell during the day. And what is kind of interesting, but probably mean a whole lot, is the dollar, which was down 0.04%, closed at the high of the day. And the volatility, which was down 1%, closed at the high of the day. So I think, again, I was working, and I think between 3 and 4, my P&L on the day dropped a little bit. And I think that probably means the market pulled in a little bit before the weekend, or somebody knew what was coming out from Iran. And by the way, I don't trust a word that comes out of there. So who knows what's going to happen on Monday rather. Over here, and we're going to probably change this to yesterday, a week ago, and a month ago, instead of looking at new highs over 1 month, 3, 6, and 12. I haven't decided what I think is the best way, but I really only look at this row here. At 12 months or 52 weeks, new highs versus new lows, new highs versus new lows. Do you notice how there's hardly any new lows and the new highs are taken off? Bullish. New highs minus new lows, 147 and 192 on the NASDAQ. Boy, that's amazingly positive, positive, positive. That makes me feel really good about the next couple of weeks. In fact, McClellan said the AD line and the NYSE, I think he was talking NYSE, is the highest it's ever been. That's pretty good. Almost at new highs on the Dow, all-time highs on the AD lines. Over here, our three indexes, 1500, NASDAQ, and NYSE. There's going to be some overlap. There are some NASDAQ stocks, think of the big cap techs of the S&P 1500. There's some NYSE stocks that are in the S&P 1500. But to me, these are three big indexes. And every stock in those indexes, we have assigned to a sector and industry group. So updating intraday, this thing here is the universal update signal. If you hit that during the day, things will update. All right, it shouldn't change much now because the update is over. All right, it's a weekend. Here it tells me on Friday, 91% of the S&P 1500 sectors were up, and this is what it was like on Thursday. Better. 86% of industry groups versus this. Better. 83% of the S&P 100 were up. 70% of the NASDAQ were up, and 77% of the NYSE were up. Very bullish day. Over here, I look at it, discretionary industrials, real estate, tech were the leaders. Healthcare was good, and so was staples. The laggard was energy, no surprise. Utilities were down as well. Down here, it tells me themes. So lower rates, home construction goes up 4.5, 3.9 silver, leisure 3.5. And I'll go through and I'll look at everything that's up over 2%. This is thematic. This gives me a sense of what's working. And if anybody's been following me, they know how heavy I've been in data centers and digital infrastructure. That's where I got my returns on so far this year. AXTI is in there. I live in this group. This is the group that will kill me if I don't get out at the right time. And it will have its reckoning as well. If I want to see what's weakest, I'll flip it around. Oil, gas exploration, Norway, which is heavy in mineral rights, energy, renewables, and MLP. So it's all energy related, was negative. That's what I get out of this sheet here. Yes, I could look at 5-day returns, and I may look at that since it's the end of the week. Fintech, software, blockchain, things that were getting killed, cyber are all up. These are all entities that, if I hit best fit, it makes it prettier. These are all entities that they thought AI were going to replace. This is how I find the wolf packs. That's correct. It might have me go look at what's underneath. And if I don't, when I go to the JS layout, Bill, pop in something about Wolfpack, so I'll show you that. That's it here. Then I go to the timing model. It's so simple, it can't help you. BS. This is why I make money. Know when to hold them, know when to fold them. It has two components. The bongo on top, which is proprietary, not really, I tell you what's in it, I made it with some friends. And a 30-period WMA. I say period because this is daily, so it's a daily WMA. On a weekly, it's a weekly WMA. You get a buy signal the first day you close above the WMA and the bongo is blue. You get a sell signal the first day, let's see. Oh, I'm looking at this. The first day you close below the WMA and the bongo is red. Both things have to occur at the same time for you to switch signals. Once you're in a signal, you stay in that signal until you get a reversion of both on the same day. It was designed by one of us, his name was Dave Steckler, who managed money, to be a timing model for his ETF trades. And he used the weekly. I look at the spider, the Qs, the diamonds, and the Russell. The bongo is my trending indicator. And the WMA I got from Stan Weinstein, who stage analysis. So I start here. I got red and green below the chart, buy or sell, buy, 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 buy. I got 4 daily buys. For the most part, they came in on April 6th. That's why I used April 6th as the time, my second time that you could look at being in the market. And then the follow through day to get it right was the 8th. Okay. I look at the weekly, and the weekly, we finally got the buy on the diamonds. So it's hard for me to say go short right now, and I'm not saying that. I raised some cash because I think we're going to have some digestion here and work off the overbought. But this is a very bullish posture. And the beauty of this timing model, look how long you stayed in the markets. From May 12th of 25 until February of 26. And my goal with this model was to capture most of the gains and to avoid most of the losses. However, it's going to get you out a few days after you want to get out, and it's going to get you in a few days later because it's a weekly model. Hence why we use the daily. So I'll look at both and I'll say things like the weekly's in a buy, the daily's just flipped to a sell. This could be a reversion of the market, but it's probably a pullback in an uptrend. We're bullish here, even though I think we got a couple days of pulling back. This is, to me, as simple as it is, a great part of this program. The next thing I do is I look at the index ETFs. And I'm bullish, and I've been bullish on my for a while. So on my charts, I always have a 200-day, it's typically red. I have a 50, which is white, simple, both of those, and a 17 simple that is green. On some charts, you're going to see this light blue, and that is a 21 period EMA. All you got to do is highlight it, it'll tell you what it is. Why? Because I like Webster, and he talks about that. I had to laugh, though, because for the most part, it's the same as the 17-day simple. And then this here in purple is the 100-day simple, which you'll only see when the market's not behaving. And what I noticed is that we had a couple of pullbacks to the 100 and a bounce, so I decided to put it on the charts to see what would happen. Here's something else you don't see everywhere. These are 3 predictive pricing models, algorithms based upon historical seasonality. The green one is going to look at the last 10 years. The colorless one looks at the last 5 years. And the yellow one here looks at all time. All I gotta do is highlight them and go look over the left upper corner. It tells you exactly what's going on. So this tells me we're in a bullish time of year. It was much more bullish down here, and we took advantage of that. And if you watched my videos, you would have heard me saying over in here, oh, we're in a bearish seasonality. We're going to probably pull back from the middle of March until the middle of April. Kind of what we did. Seasonality is great. It doesn't always work, but I love it. And so I look at this, and what else do I see? High-low jump is at 96. Above 95, I'm looking for a pullback or a pause in the uptrend. The high jump measures extension. Carter Worth, who's a great chartist, will get on CNBC and he'll say, the market is extended. Well, okay, I'm a scientist. Give me the math behind that. So the brilliance of Ian he came up with math that measures extension. It looks at the close compared to the 17, the 50, and the 200, and it ran between 0 and 100. And I said, Ian's pretty smart, but I bet we get the low jump too. And when you're extended to the upside, you're going to revert to the mean. You're going to pull back. And when you're extended to the downside, you're going to bounce. So Ian had the high jump. I came up with the low jump, and then I combined them in a high-low oscillator. At the lows, it was minus 100, or yes, minus 100. You're going to bounce. At the highs, and what does that mean? It means if you look back for the last 200 bars, that's how we coded it. You are the most extended you've been for the last 200 bars. This is bullish. Down here, I've got my dots, which we'll talk about later if you don't know them. And this is just unbalanced volume, which is above its moving average, so that's strong. And I'll flip through the Qs and say the same thing. The diamonds, this was an area of resistance we busted through. The Russells doing great. They're all doing great. And you can see the seasonality is on all of them. And then I get into the VIX, which I thought the VIX was remarkable because this is where the VIX likes to rest. And we never came down. We finally came down. So I feel much better about the VIX. And the dollar's been a non-issue. It's well off of its prior highs, which you can see to the left or up there. This is sort of the dollar at 100, which seemed to have been resistance, and we came up and we failed. So dollar's good. So from the index perspective, we're overbought, but I'm not bearish by any means. On the commodities, I'll do the same thing. And this all opens up for me every night once I set it up. We had this massive fallback here. We had a 20% drop in 5 days. Consolidation, breakdown, we're consolidating again. So gold, it's probably going to come back, but I don't touch it till it gets above that 50. We look at silver, we had a 68% pullback. It's still consolidating kind of around the bottom of that area. It got above the 50, seasonality is kind of nothing. If you go back to 2011, oh, Robert, it already is there. Let me show you seasonality. Ignore what I'm looking at. I'm just pulling something up on a window that I don't use. You want to put seasonality on this, on a contra. That's stupid, Jeff. Let's look at the IWM. I want to add seasonality here. And I want 3 different time frames of seasonality. So I'm going to go up to indicators. And I'm going to search till I see seasonality. I'm going to 1, double click 2, double click 3. I just put 3 seasonalities on, I think. I go up into the window here. I open up the gear. And up top, I've got 1, 2, 3 seasonalities. Now, on seasonality 1, let's going to make it white. Seasonality 2, we'll leave it purple. And seasonality number 3, we're going to make it orange, just so they're different colors. All I did was I changed the color. Now I'm going to open the gear up again and go back to seasonality. I can either apply seasonality to the beginning of the year or to today's bar. I like today's bar. So let's make the first one be 5 years. So I right click here, 5 years, put it to today's bar. The second one, let's make it 10 years. Let's take it to today's bar. And the third one, let's make it today's bar. Let's hit OK. And you now have 3 time frames of seasonality. And You can go back and watch the recording. So that's why I do these live. Thank you, Robert, for the question, because I make assumptions. And assumptions are not the right thing sometimes. So silver consolidating. And if you go back to 2011, it takes forever to come up. Oil obviously pulled back. It's going to be news driven. We'll see what it does on Monday. Oil is the new VIX. When it's down, the market's up. Natural gas is worth a lot of money, but not in the US, doing nothing. The 10-year actually dropped a lot on Friday. It dropped 1.46%, closed at 4.25, less than 4.3 is good. The 30-year also was down on Friday. It was down. Now, I can't point to it, but if you look at the upper left, you can see the data window. It says it was down 0.89. You don't get the change unless you put in this indicator here called percent. And where you find that is you go into indicators, and we're looking for close to close. And I don't go into these very often because I've already built all my closing price to closing change. So you got change percent and percent close to current close. You put that on any window, and then every time you highlight a bar, it will tell you what the percent change was and how much it, the movement on the day. So we were down on the 30-year, a little bit less than 1%, and we're down to 4.89, which is good. 5 is a bad number. So being down is good. So nothing nefarious there. We ended the day a happy day. Buckets. Take the Bollinger Bands, okay? And imagine that, let me see if I got a picture. I'm just going through my slides that I'm not sharing with you. That I am not showing you, but you're going to get to take home or download them. So if the top of the Bollinger Band is here, the bottom of the Bollinger Band is here, the middle of the Bollinger Band, I think, is the 20-day moving average. If you take from 0 to 10 and make 10 slices, the first slice is 0 to 10, the second slice is 11 to 20, the third is 21 to 30, and so on and so forth. And every stock has a percent B. Percent B is what percentage of you between the top or the bottom. If you're 0.5, you're right here. If your point B is 0.8, you're down here, and you're the lowest slice. Now, you could be above the Bollinger Band or below. And we know that 5.5% of the time you might be below, 5.5% you might be above, which means 89% of the time you are going to be within the Bollinger Bands. So if we find a time when we have a ton of stocks here above the bands or below, it gives us a signal that maybe it's a reversion to the mean. And that's what we live for. We live for signals that suggest that the market is going to is going to have a significant move. Now I messed myself up here. Give me a second to fix what I did here. I know we're at almost 12. I want to go through a couple more of these layouts, and then we're going to stop for a break. So back to where I wanted to be in the program here. Okay. So quick look at the buckets. Let me tell you what matters. 20% above, 20% below, pay attention. Doesn't mean anything's going to happen, but if I get to over 20 on this bar, which is the 11th bar, and this here tells you what the number is, you can see what it was yesterday. If you highlight it, it will tell you what it is and what it was a day ago. So we're at 11% above on the NYSE, 12 on the NASDAQ, 16 on the Russell, and 12 on the S&P 1500. We are slightly overbought by this model. Let me show you why I could be a dick and put out the market is in last year and make it like I was smart. I'm not smart. I just have a program that's smart. Do you notice anything different in this picture than the last one? Of course you do. What you notice is that Everything's below the Bollinger Bands. Well, this was a record-setting day. 76% were below on the NYSE, 79% on the 1500, 66 on the Russell, and 54% on the NASDAQ. It was one of the easiest calls I ever made. But having this power, imagine what you could do. You're your own guru. Don't rely on others. And certainly don't rely on the people on TV. That's where we are today. Bullish, getting a little bit overbought, not to an extreme. We're going to look at these. This one takes a while. I went back to 96 because 96, actually, no, this is 2000. I have to remember which time I looked at. This one I went back to look at the dot-com craze. And what I wanted to look at was, no, that's today. Never mind. It reset while I was talking when I switched. All right. I went back to look at some of the prior ones to see what would happen. And sometimes after this run, we keep going higher. Sometimes we crash. A lot of times we go sideways. I think we're going to go sideways for a while. I really do. This is market breadth. And this is a whole lecture on itself. But I have a series of tools that help me identify the bottom. I have my trending indicators daily on top of weekly. I have my high-low jump. I have my charts with moving averages. We have a VWAP tool. And I was just curious if I put an anchored VWAP on the high of 26 and the high of 25, was there going to be resistance there? There was none. I've got my moving average. These are the lows of 25 and 26. I have stocks above, percentages above the various moving averages. You can see the moving averages there. And over in here, you can see what percent's above. Well, heck, if I look at where we're at today, and I look at back a long time, we're high. That's a danger sign. We are high. That is a danger sign. So part of why I think we might have a sideways move or correction coming is because we're extending. This looks at the new high, new lows, AD lines, and up down volume. Very bullish. On this big run of the market here, on the NYSE, we had one day that was negative on the new high, new lows. Bull markets are based on new highs. They're built on new highs, not on new lows. Down here, I have a whole bunch of tools, so I'm going to save it for another day because we're not at a bottom right now, we're at top. And then we got that 13-week. On the NYSE, let's pull it and look at where it's at today. It's at 95%. It's at 92% on the NASDAQ. That 13-week new high, new low over time is a moneymaker for me. And let's go to 2007. Not 2007. Let's go back to April 7th of last year. Point 1. Point 1. It's not brains, it's knowing patterns. It's memory. It's recognizing that when you get to certain points, you are going to reverse. I'll teach you these at a separate meeting because we could be here for 4 more hours and we need to take a break in a minute. But I've got the best tool set for calling tops and bottoms on the market, except for Sagar, who I'm going to use gently, gave me the biggest compliment in the world because I think he's pretty brilliant himself because he copied what I do. And believe me, I copy some of the things he does. We're friends. What are friends for but help to make each other better? And he's got a tool. Oh, it's not the tool I wanted. Let me connect to the, sure we're online. We'll try that again. Oh, I bet it's on a different window. Bear with me, it is. And all those things that I have, the Hindenburgs, the Eurekas, the Phoenixes, the Bingo Bango Bongos, The stocks above the moving averages he does in the Q market breadth, and I run it to check my results. It's a great tool as well. If you have meta stock and you don't want to invest in my tool, I understand. You need to buy Q Divas and Q market breadth because they're awesome. I look at ratio charts. These are all ratio charts versus the spiders. Why? Because it tells me what's leading the market. I want to be in technology right now. It tells me short term what's doing better. It tells me what's not doing so well. Ratio charts. I'm going to skip seasonality and financials for now and close for right now on market breadth, new high, new low. It's similar to the prior market breadth, but what I did is I wanted to have different indexes. So instead of the NYSE, I've got the spiders, the S&P 1500, I've got the Russell 2000, and I got the NASDAQ composite. Notice my follow through days are automated. If you got version 26, you probably got green dots there. I want to make that your choice, green dot or the words follow through day. So I've got 13-week high low. We already told you they're dangerous right now. Stocks above the moving averages, we're at peaking, especially on the short term. AD lines, I look for divergences, and I'm trying to decide, is it a divergence that my that my NASDAQ's at an all-time high and I'm not on the AD line? I think that is. It can get fixed pretty quickly. It's not as bad as the AD line breaking down, but that bothers me. It means participation is not as great as it could be. And then I've got RSIs. On that note, I think I'm caught up on questions. I appreciate you being here. I can't believe so many of you are still here. It is 12:08. We will reconvene at 12:15. So 7-minute break. I'll see you back in 7 minutes. All right, it's 2:15 and I'm back. If you can't tell, I really like doing these things and I would do them more often, except I have this boat. And on days like today, usually I'm out on the boat. I'll probably go there when we get done. Hope you guys are back. Type a Y in if you can hear me, if you wouldn't mind. All right. So I've shown you a lot in the program of what I use it for. And all that I showed you was how do I figure out if I want to be long or short? How much cash do I want to have? But trust me, that's 70%, 60% of the game right there is how aggressive do you want to be, and are you long or short? I started doing this in the videos because when the mags started working again, I figured I should be watching them. And so I've been going through the mags every day. Now I own several in my short-term portfolio. I'm sure my long-term portfolio has all of them. I don't pay attention to what's in my long-term because they're long-term. And I don't trade that the same way I would trade short-term. So Amazon had a nice breakout, not a great day on Friday. It was up 0.34, but it failed to break out. So be careful here. Kind of interesting, a very bullish candle here with a long tail and a very bearish candle here. Probably goes which way the market goes. Apple looks great. I mean, I was bearish until it got above that 50, and we talked about it on Wednesday. That probably a good time to buy. And Apple's breaking out there. Google, I've been in since it broke out in this area, 290. So that would have got me in. I guess I got in on this move up here. Looks great. Meta, I missed because I don't like things this far below the 200. And by the time it did this and then a little flag, I missed this breakout. This was a great, nothing wrong with Meta here. It's actually taken out the 200. Had a nice run. And it's in my long term, I know that. Netflix, but it sucks. Excuse my French. because, like I told you, I felt pretty good buying it off of this level. And boom, and then earnings. And this worries me because the last earnings cycle is what killed big cap tech. So I'll watch it for a couple more days. My put expires in May, my call expires in May. And now I can do all kinds of fun things. I could sell a put underneath that current price, pay off part of what I paid for that put. I don't think it's going to drop much more. I don't know that. I'm just guessing. Um, I might sell a call out of the money above because it'll probably expire worthless, probably gonna do nothing for a while. So I'll think about if there's a way I can make more money on that trade. But if I do absolutely nothing, I have between a 90 strike and a 108 strike, which is kind of what those two options are added together are worth right now, is what I get if I held them to the end. So I don't have a whole lot of downside. If the call goes up, the put will go down in value. If the call, if the market breaks down, the put goes up. If the stock goes to the moon, the put goes to zero, but I get the gain in the stock. So it's kind of collared right now. So we'll decide what to do. So Netflix, bad day on earnings. Tesla, I was bearish when it's below the yellow line. It took out the yellow and white line in one day. This was the day to buy it was on Friday. I hate the fundamentals. I don't know what this company is. It's not really a car company because if it's a car company, why does it have a PE forward looking of 278? That's not a car company. It's a high end tech and solar company that has cars as a revenue source. But I have a hard time figuring out the valuation of Tesla. But technically, I put this in here as my worry for resistance. I'd probably be long here, not short. NVIDIA, I had this in a Darvis box, and then we put this line in, and it broke out. NVIDIA, is it finally going to move? The last several earnings cycles, it was NVIDIA does nothing. We'll see if it saves the market. Microsoft kind of reminds me of Meta. I'm late to get back in. It's in my long term. Heck, why don't you manage some of my money? I think it's in your I think it's in your account as well. Yeah, Microsoft looks great here, but boy, this was the earnings disaster of last quarter. Beat earnings, raise everything, and then they talked about their CapEx. And like people were surprised. I have no idea why they'd be surprised. Labu, I like to put some of my favorite ETFs in. This thing is like driving on meth. It moves so hard and so fast and is so news driven that you have to be careful. But biotech typically does well when the markets are running, and it's running. What drives biotech are earnings or lack thereof, revenue or lack thereof. No one really cares on these small stocks. It's news. It's new drug approvals. You know that date's coming. Typically not a big surprise. It's binary. It's approved or not approved. That's the surprise. But then, do you know when every medical meeting is scheduled? Do you know when data is going to come out that will move the stock? That's what makes them hard to trade and why a lot of people won't. But let's put a monthly on LABU. That's the reality of biotech. When it works, it really works. But it's a tough one to trade. I like biotech because I probably have, because of my career in healthcare, more insight with a T, not inside with a D, in making my decision making. I like to look at biotech. That's why I have LABU here. I like to look at the software to see if it's going to bounce, and it took out what I thought would be resistance. I've got a small position here. A lot of good companies, Oracle, Salesforce, Microsoft, CrowdStrike, a lot of good companies in here, and they all fall in the category, oops, AI may replace me. Data centers, know when to hold them and know when to fold them. Data centers are leading the market right now, and that's why I'm heavy into all the components of data centers. until they stop working. And this one I like to look at, which is Shield, which are a lot of those defensive stocks. Uh, at some point, it's going to break above this line and be bullish because we have a lot of money to spend on defense. We've been using up our military's reserves. So I look at that, and then I go into the best part of the program, which is the stock picking, the JES layout. Since a lot of you own it, on my comments when it was $8, what are you going to do with Summit? Summit's starting to move. It has a PDUFA date scheduled, which means on their cancer drug, there is a date already. What did I just, oh, there already is a date scheduled for the decision on approval or not. It is thought to be a 20, or it was 200 billion. I gotta get my math right. I think it was a 20 billion a year category of sales, and they'll be first to market and the leader. As a cancer doctor, the fact that it works makes no sense, but it's very exciting. The big concern is a lot of the data is Chinese, and will the FDA approve it or not? You can read all about it. We have 3 tabs in news now. We have the regular news wires. We have corporate press releases, propaganda, and then we have who's buying it and selling it on Wall Street, not Wall Street, in Capitol Hill. There's no senators buying it. I just know that the PDUFA date's later this year. I was in a lot of it. I'm in a little of it now. I didn't think it would get approved, and that's why I cut my position. Obviously, some people think it gets approved. Be careful. I'll probably sell half of my position when it runs up into the approval date. So this is where I make the music on stocks. Now I wanted to talk about wolf packs. So up here are different lists, and every list up here is pre-populated. The base list is all the stocks in the NASDAQ, in the NYSE, and in the Amex. And every day we filter it for 100, for 1,000, for $1 and 100,000 shares. So right now there are 3,648 stocks that pass the screen. Weeklies are just from a list of stocks that have weekly ETFs. I think we're missing a bunch, but these are some of the bigger ones. Then the Russell 1000, you want to trade large caps. Russell 2000, you want to trade small caps. You just want to stick to the S&P 1500, you can do that. Then we have the complete NYSE and the NASDAQ. We have a large number of ETFs, the S&P 500 and the NASDAQ 100. So if you don't want to trade from a big shopping list like I do, you pick which list you want. I opened up the ETFs for a reason. Well, this list is not filtered for $5. This is the base list. No filters are in, Pat. And this is $1 or higher. If you think we should have stocks less than $1, we can take that out. To filter for $5, and these are ETFs, I want to make my life easier. I'm going to filter them for, I want it to be above $5 and 500,000. So I have to manually do that. You may not want to do that. That's your call. The reason why I did that is I want to find data center. Well, you can have the full Monty. I agree, Pat. You can get bombs, you can get rockets there. No issue with that, and I can talk to Praveen about maybe just having a list of $5 and below for people that want it. And I'm going to go for DTCR, and the DTCR is right there. So this little tool over here, it's called Split Grid. I clicked on it. Now I'm going to click on data centers. Oh, guess what I just pulled up? I pulled up the stocks that are in the data center ETF. If I own those, maybe I would want to look at these stocks. So I might highlight them at all, and I could add them to a directory I created today called DTCR. And sometimes it works, sometimes it doesn't. Let's see if it worked. Yep, I copied them all over here. Let's say I want to see what a index would look like of these. I click on this one. It had been broken, yep, and it just created an ETF of all the stocks, equal weighted though. And look at this, looks just like the market right now. So this is Wolfpack to me. This is a group of stocks within a theme that are moving together. Let's see, we got 35 stocks in the list. We've got 30 of them are up, 5 of them are down, and of the ones that are down, Micron profit taking, Fastly was a big mover that's pulled back some. This guy had CoreWeave had a good week, but pulled back on Friday. So again, just to review what I did, I listed the ETFs, and if I have, I got to go back into Impulse list, which is going to have whatever list is there. This is the Impulse. If I wanted to look at DRIP, which is an energy short bearish energy ETF, it may not have components because it's a commodity, and I don't know if there's, there aren't stocks that go down. So I got to look at the up. We should probably take the shorts out. Now the diamonds, is going to give me the components of the diamonds or not? Yes, stocks in the diamonds. So I can always build out the components. Now let's turn that off. Let's go back to my base list. It's going to take a few seconds. Let's take out my filters. Now let's say, and this I'm still trying to figure out, this is how the data vendor's doing it. I hit the split, and I'm going to highlight Albemarle, which is a lithium company, a miner. And it's telling me the peers of ALB. Now, I look at these peers and I scratch my head. Some of these, like SQM, does the same thing. And I think Suez also does the same thing. But then I got specialty chemicals. So I'm not sure I love the peer one, because I think they're looking at the industry and sector and they're not looking at the theme. But you can build your own ETF by finding stocks that look like that stock and calling it whatever you want. Do I use that much? No. I'm just showing you the feature. So the power of the program is this drop down and top down. So let's go to top down first. In top down, I've got the same 11 sectors that you would see anywhere else. I have 160 or something industry groups, and each industry group has its own index, etc. And if I want to do top-down investing, I could rank things many different ways. I could rank them by two-day momentum. I like that one because it sort of eliminates one-day wonders. And I'm going to pick top three: industrials, discretionaries, which is cyclical, and tech. I've got 1,409 stocks in those three sectors. I'm using the base list, which is the big list. Now, I could have ranked these by 3 different time frames for momentum, intermediate and longer, one-day percentage change. I take my pick. I did these by 2-day momentum. Then over here, how about looking at percent change? So let's take the biggest movers in the top 3 industry groups. So let's take the top 10. 1, 2, 3, 4, 5, 6. So I got 172 stocks now, which represent the top 10 industry groups in the top 3 industries. Now let's filter that. I filter it. You don't have to. 5 and 500. Now I got 113 stocks. And then I don't know what the right way of filtering here is because I've done them all. I could look at relative volume, which are the ones that really have big volume. And I can just go down the list. And the program is fast enough that I can do, I call these flickies. This is what I loved about HTSI. This is an online program. I am on with a bunch of people in Zoom, and you see how fast it is. So this is one way to look at it. And I'm looking for things to buy while I'm doing that, and I'm not going to find a lot. This one looks interesting. And I think one of us on the call, if he's still here, used to work for this company. MAGA Internationals, uptrend, big pullback here, breaking out over the 50. It had momentum breakout and volume and the CPR signal, a relative strength breaking over the OBV, the moving average, which means it's outperforming the market. Good volume, not extended. I would put that in my buy watch list. I just right click on it, I send it to the buys. I should have used this one to do my workup, but I didn't see it. I'm going to continue down the list. Carvana, United. I'm just looking for something else that's a good setup for what I like. And not seeing a whole lot that do anything for me. I like Walmart. I'm already in Walmart. I love trend lines, so hopefully when I turn on the auto trend lines, it's going to look like this. So I got to get above that trend line. I'm already long, but it's sitting on the 50. Momentum, breakout, volume, and CPR. Now, how will you even know that? Because in the ETF, in the PDF that I'm going to put in top-down trader, tells you what each thing is. All right. Whether you use my app, Metastock, or TradingView, they're the same indicators. And you want to know what they do? Just keep on scrolling. It tells you what they do. All the indicators are explained, and I go through the Metastock stuff. And you all get that for being here. It'll be in the top-down trader. So I would go through until I get bored. So Walmart looks good. MGMA, and I just keep going, and see, this one looks interesting. Rush Enterprises, I'll keep going. I don't like Make My Trip, not because I don't like what it's doing here, because I don't like, nothing good ever happens below the 200. Yes, everything that rallies may start below the 200, but there's too many starts and stops and risks. That's what I typically do every night to start my analysis. Some nights, everything's up and it doesn't differentiate. I'll just go over here and I'll just do the top 10. Now this is going to be different because I'm not limiting it to the top 10, 3 industry or sectors. So I might just do the 2-day momentum here and then just take the top 10 and basically the same analysis. And I'll just go down the list and look for things. Come on. A lot of these have run already. I'm looking for things that are sitting right by the 50. Construction partners. This is actually building out data centers. You highlight over the name. About 90% of the stocks will have what they do. It's their site development business that's impacting data centers, and that's why it has been hot. I have technicals and I have news. If you are a growth stock investor, you care about earnings per share growth. So I tell you what the earnings were going backwards, the change, but also if it was a surprise or not. Revenue, change, surprise. It's going to be a loss of 4 cents on May 8th. It was a gain of 8 cents. I don't like negative. It's going to be 67 cents versus 57. Well, at least the revenue is going. Pattern's not bad, maybe a little bit too loose. Let's keep going. And then the news is over here. And I'll just go through and see if anything looks attractive. Now, UMC was good 2 days ago. It's a little extended now, cheap stock. and I'll just keep going and I'll find things that look delicious. Because why should I buy something that isn't exactly what I want? I got thousands of stocks to look at. So I went through. I'm done with the top down. Then I'm going to go over here and I'm going to find my impulse, go back to the impulse list. I want to kill that. Make sure I've got my 3600, make sure I don't have a filter on. And now from a bottoms up perspective, I've got a couple of scans built in, A plus. Okay. Not one stock made my A plus scan. That is interesting. It hardly ever happens. The A plus scan is something that I noticed over my time in HGSI, that if a stock was in an uptrend, pulled back, and had two kahunas in a row, which is a percent B change of at least 0.24%, which is a big move within the Bollinger Bands. If you get it 2 days in a row, that stock was going to be a big mover more often than not. And then I filtered it for Alexander Elder's Impulse Index to make sure I only had stocks where the momentum was going up if I was looking for bullish trades. And then I took those double momentum dots and I added things like relative strength has to be positive, volume has to be positive. I think you have to be above the 200 and you can't be extended. Well, nobody made that. However, if I just go down and I look at 2-day Momo up, I have stocks that made it, but they won't meet the other criteria. Below the 200. IPO, it doesn't have a high jump, so it's not talking about extended. Here's those two blue dots, two momentums in a row. The reason why I made it a standalone, it's a great signal. It is a great signal. The A signal, I like pullbacks and uptrends. So I combined the things that I like. And which is when I worked up. When I worked up isn't in here. So Frontier. I want stocks that are in uptrends, that have had a pullback and break out. I want them to have squeeze, momentum, and a breakout on today. The fact that this had volume and a gap, it just shows me how powerful it was. The CPR is it's a type of a moving average crossover, but it's not using price. And then above it is an early signal called the EMS. And the CPR and the EMS are standalone trading systems. I used them when I was non-solicited and I couldn't hire people or build a company. And to me, that I like to see them in the same direction the trade I'm taking. Here, relative strength is crossing over its moving average. This is a relative strength of the instrument versus the spider. The moves occur when it crosses over. Move is over, it's crossed below. It's crossing over again. It's a move. Those that used to go to HGSI, remember Chris Wilson? I think he lived in Alabama or something. He showed that to me, and I just fell in love with it. Yes. Pat just asked, is there any way to see what's in this? There is. It's right down here, Pat. In fact, I'm just going to open up the pen, and it's going to make it right here. You can see exactly what's in it. Price, the bongos, the relative strength, both daily and the weekly, the up, the dots, it gives you the components. Viatris was another one that looked okay. I'd have to do some research. It's a generic drug manufacturer. It's had its fleas, but notice when you traded above the moving average, we began a big move and we pretty much stayed in that move until we traded below it. So why not scan for that? Why not use that as an edge? Chris was a good guy. I don't even know. I assume he's still living. He was younger than me, but those were a long time ago that we had those meetings. So that's what I do. That's how I find the stocks. And one stock that I liked a lot, I should be careful when I say liked a lot. Now I got to remember what the stock was. Five. Five below. Pretty nice uptrend. Yeah, I wish it was a little tighter, but that's a nice uptrend. I can make it tighter, I just squish it down, but that's a nice uptrend. I've got a resistance line here. So a breakout above this line might be interesting. My seasonality, remember, it trumps, technicals trump seasonality.